Hey friends, welcome back to Rate the Dream, Life, Love, and Mortgages. I am your host, Melissa, and I am here with a good friend of mine, and he is also going to chat all VA loans. Justin Atteberry, thanks for joining me.
Yes, absolutely. Thanks for having me on here.
Yes, so tell everyone that's listening a little bit about yourself.
So I'm sales manager down here in Texas, kind of the Dallas-Fort Worth area. Oh gosh, been in this game, if you will, for 18 years. Got in 2007, pretty much when everything went to crap, and just kind of found out that I was pretty good at connecting with individuals and loved helping people with their mortgages, and so I just kind of stuck with it. I guess it's kind of why I'm not overly concerned about what's going on with the market right now and all that fun stuff, because at the end of the day, if we can live through an actual housing collapse, then this is nothing.
Yeah, I am tracking you. Okay, so tell me. Okay, so we've been doing this. What you said about 18 years.
Yeah.
And then your primary focus as of late, well, not of late, 12 years. We are all VA focused.
Yeah. So VA runs about 67% of my annual business. I kind of, about 12 years ago, I just kind of began to see that there was a lot of misinformation out there on the VA. And my heart goes out to our veterans to begin with. And so I just kind of made that a mission, if you will, to help not just veterans, but realtors as well understand the VA home loan benefit, the ins and the outs, and how incredibly flexible the VA home loan benefit is. And just through that, it just kind of became the primary source of my business. And at the end of the day, it was kind of funny because it unintentionally became a back door into a lot of the other business. So a lot of my realtor partners, they know that I obviously after 18 years, if I can't do a conventional loan, then there's a problem, but yeah, so, it's not just VA for me, but it is the primary source. And it's what I spend a lot of my time educating others on.
Yeah, I agree. I think mine is, they send out the numbers for us, and mine, same thing. It was like 72% of all my business was VA business. I mean, we do all loans. I don't turn down any loan, but a lot of my realtor partners are military spouse or prior military, have some sort of military affiliation. So that's where the biggest bulk of my business comes from. Yeah. And I'm very passionate about it because, as you said, like there's just so much misinformation about it. And especially my biggest trigger I found was like during the pandemic. And I know offers were crazy everywhere, right? There was like 30 offers on a home and stuff like that. So, but that's when I noticed the bulk of it, at least here in Virginia, where VA offers weren't being accepted because of all the stigma that came with it, right? They're like, oh, you can't close on time. Oh, the buyer's putting no money down. They have no skin in the game. That we saw a lot of that here. And so that's when it piqued my interest. Okay, we have to start educating the buyers as well, the veterans that are using that, as well as the sellers, as well as the agents, so people could understand it. So out of all of the myths, what is your favorite one that you like to touch on and to educate people on?
So favorite's kind of funny to say, but I know what you're asking there. I think the one that I'm just going to be blunt about it, if that's okay.
Yeah.
Part of the one that drives me nuts the most is that VA and FHA are basically the same loans, just VA, they don't have a down payment. And really the truth is that those two loan programs are a night and day difference. There are similarities, but there's also similarities with an FHA and a conventional, a VA and a conventional. They all have a foundation in which there are things that are similar. But when it comes to the VA, it in my opinion, it stands out on its own. There is not another program like it at all, especially when you think about how incredibly flexible the VA home loan benefit is. And I'll give you a prime example is that if you get an FHA appraisal, and let's say you're in a contract on a house for $400,000 and the appraised value comes in at $385,000. There's a $15,000 delta or difference there, and yes, you can rebut it and you can try and fight that appraised value, But most of the time, a VA appraiser, a FHA appraiser, once they say, hey, here's the value, like that's it, you know. Whereas VA, we can basically go above the appraiser's head and go straight to the VA because the VA wants every deal to work for the veteran. You know, it has to make sense. Right. But they want every deal to work for the veteran. And so if that appraised value comes in low, then we can go straight to the VA, ask them to reconsider the value with, comps and the evidence that would support the value. And more times than not, they will absolutely do it. And I've had some that, the comps actually were good. Like the appraiser used good comps and the value was spot on and it was still low. We went to the VA and they raised it anyways.
Not funny. We had one, where they didn't want to fight it, but they were putting money down. So it didn't change, right? We didn't have to argue it. I feel like the appraiser there might've been room to argue it on our end, but the veterans didn't care to do it. They just wanted to get in it. They were putting money down anyway. So it didn't shift anything, right? So for us as lenders, it doesn't matter. We just shifted the numbers around because they were putting money down. I love the VA loan for lots of reasons, but like for us, there's no max like DTI, right? So if you have someone that's got some good credit, some reserves, we're not capped for conventional loans. There's no wiggle room. When you get to that top point, you're done, or even with FHA, but you can manually underwrite a VA loan and go further than you can on other loans.
Absolutely.
Way more wiggle room, just with the appraised value and then also with the debt to income ratios.
Exactly what you're saying there. I would say that's also one of my other favorite pieces of the VA home loan benefit, or just the VA loan in general. Again, take conventional, take FHA, USDA, whatever. All these other loans, they run off of debt to income, whereas the VA, it's actually a residual income based loan. So, what's left over, the example I like to use is that if you have somebody that is, let's just say they make $10,000 a month, the new mortgage is $3,000, right? But then they've got $2,100 a month in other bills, other liabilities. So they're at 51% debt to income. Automatically, conventional's out the window. Can't do it.
Yeah.
Right. FHA, as long as generally the credit scores are high enough, you can go to 56.99%, which is, remember, that's gross income. That's a lot, right? But the VA, they're not really looking at the debt to income. They're looking at how much money is left over once the bills are paid, utilities are paid. Do they have X amount left over based on their family size? And if they have that particular amount left over, the VA says, you're good.
Yeah. And that number is really high.
Yeah.
Not, I guess with really high be the right way to explain it. The residual is not thousands of dollars, right? It is depending on the area that you live in too, but that's the catch too. Is the residual income is different than the debt to income ratio, and that
it's a
different lenders have different overlays. But we'll speak for us because we work for here at CMG, so we can speak for what we're allowed to do here. But that's the catch too. Some don't. But if you follow what VA says, then right, we go off the residual income.
Right.
Okay, so let's go back to a little bit about VA appraisals, because I know you are big on teaching the classes to your referral partners, and you have a buddy, a friend that's a VA appraiser. So, because that's one thing that when listing agents call, which as I'm saying for you, right, they want to know all the details. They always want to know, can they go conventional? That's annoying as hell for me. But then they want to ask you, about the appraisal and what is the appraiser going to find. And so in your years of doing it, your expertise, what is it that you would tell a listing agent or you would tell a seller, hey, this is what the appraiser is going to look for when they come to your house?
Yeah, so I think number one is, and it seems kind of basic for probably you and I, and I think thankfully a lot of realtors know this now, but number one is, was the house built prior to 1978, right? Because if it was built prior, then we have to get the lead-based paint addendum, right? And I actually had one recently that was built in 1952. And obviously, or it's very unlikely that they got the original paint from 1952. Right. But you can't, in its own respect, you can't discriminate on that either. So because there's this one teeny tiny bit, an iota chance here of that's the same paint, you have to do it across the board. So that's one thing I was like, all right, what year was the house built?
Mhm.
Right. And from there, it's simple things. It's nothing crazy. Is there peeling paint? Is there chipping paint? Is there rotted wood, around the garage, around the front door, back door, whatever? It's mostly going to be exterior.
Mhm.
Interior items, unless it's heavily damaged, interior items fall under cosmetics, which the VA doesn't. It's not that they don't care; it just doesn't have as much weight to it. And so, if you have, someone that has the floorboards are missing, well, that's what we call an NPR waiver, right? You can get a minimum property requirement waiver on that. The appraiser then has to go in and say, okay, well, these floorboards are worth $700, right? And so what they'll probably do is they'll just deduct $700 from the appraised value, and then we just move forward. But it's things like that.
Yeah, we got caught up 2 houses ago, or the house prior to the one that my husband and I own now. The lady was buying it and she had a VA loan, and we had, for cosmetic wise, it looked better. We took our front railings off of our porches. We were going for that farmhouse trend, which whatever. So, but it was just enough off the ground. When the appraiser came, he was like, you have to put the railings back up. He was like, because it was so and so off the ground. So like that was, and we had really narrow stairwells, so ours were missing from there. So they made, was, hey, you have to put those back up, which we did. And I think we had a broken pane in one of our windows. But again, like you're saying, most of those are things that if you're selling your house anyways, right, and you're walking around and doing, you're probably, odds are you're fixing it before you even put your house on the market anyways.
Right. And that's the thing, VA, the 3 S's: safe, sound, sanitary.
Yeah.
You mean those 3 things, you're good.
Yeah. Yeah. And unless you're selling like this as is house that's falling down, there won't be any issues, right? So that's, again,
Right.
that's one of my favorite.
Let's play that right quick. So since you and I both work at the same company,
Yeah.
Week ago, I think it was, we just got the new VA renovation.
Oh, yes. Yes.
So, yeah. If there are, I'll tell you what I love so much about it. I got on the horn with so many of my realtor partners and say, hey, those houses that your clients are looking at, that the ones that come in as a cash only, like they won't even take conventional, they're like cash only. I'm like, well, hey, what if your veteran buyer is interested in that house? It's like, we can do a VA renovation on it. So it needs a little bit of TLC, right? Okay, let's do a VA renovation. It's something that is so incredibly powerful when used correctly, that we can continue to help our veteran buyers.
Yeah. And that thing covers too, like some of the competitiveness too, because some of the homes that do need a little bit of work are not nearly as competitive as the neighbor who has fixed everything up. So, but now we gave another opportunity to VA buyers who before wouldn't be able to buy something like that, because now they have the opportunity to do it. I think it's awesome.
Yep, absolutely.
I haven't done one yet, but it just came out, so I'm super excited. Yeah. I am pushing it. So, hey, anyone listening, right, we can do VA renovation loans. One thing when I started doing mortgages, and it's funny because I did real estate for a long time. Then I ran a title company. And then when I switched, I had to learn loan guidelines. I didn't know loan guidelines. I mean, I knew enough, but one of it that I was actually dumbfounded, and I think a lot of people too, is that you can use your VA more than once and at the same time. Like when I was like, oh no, that's not a thing. And everyone's like, oh no, that is a thing. And I was like, really? And I think a lot of people think that they have to refinance if they're moving. They have to refinance to a conventional to then free up their eligibility to like buy a new one. That was like what I had in my brain like many, many years ago. That was like 12 years ago before I started doing mortgages. But
yeah, well, I actually just had that conversation with a gentleman yesterday, actually. And he's coming in from Utah. He's PCSing actually. Mm-hmm. And so I asked him, I was like, okay, well, do you have a home that you have out there in Utah? And he said, yes. I said, okay, well, so it's not so much what you owe right now, but how much did you buy it for? Yeah. And he told me, and I did the quick math on it. Boom, boom, boom. I said, all right, you can go up to $630,000, whatever it is, somewhere in that ballpark. I was like, without a down payment, and still keep your house in Utah if that's what you want to do, right? And it's just, like I said, one of the most flexible loans out there that, like I said, so many people think that you can only use it once or only have one at a time. I've got personally multiple VA clients that have used their VA 3-4 times, just the last 15 years, because as the county loan limit keeps going up,
Right.
it increases without a down payment, so yeah.
Okay, so explain that, right? So if I am not me, because obviously I know you're talking about, so if I'm someone that's watching this, explain that a little bit in more detail to them. So if I own a house and I'm moving here to, we'll say Texas from North Carolina, because it doesn't really matter. How do you calculate that? And what do you mean when you say loan limit? I'm gonna make
Okay, yeah.
easy, right?
So let's start with the loan limit because it gets incorporated in. So the current conforming loan limit, and that changes what feels like every year for the last 5 years, it keeps going up. It is currently, I think it's $806,500, I believe, or somewhere in that ballpark. So what you do is you'll take whatever you bought the house for, your current home, and you're going to multiply that by 25%. And that's going to be the amount of entitlement that was used to purchase the existing home. Okay, so make it really simple. I'm going to use my calculator right quick so I don't, fudge this up. But let's say that someone bought a house for $250,000. 25% is $62,500.
Okay.
That's the current entitlement that's been used. Okay, so I'm going to take that county loan limit, 806,500. I feel like it's 803, but we're going with 806 for now. And then you're also going to multiply that by 25%. Okay. So that's $201,625. Now you're going to subtract out that entitlement, the 62,500. That leaves you with $139,125. Last piece of math. Multiply that by 4. That means that in our scenario, a veteran could go buy another house without a down payment using their VA with a maximum of $556,500.
Now they can go higher, right?
Yes, thank you for bringing it up.
So they can go higher. They just have to put money down.
Yes, but here's the kicker on that, and it's a fun kicker. Let's play this scenario out. So their maximum is $556,500. Let's say that they found a house that is $575,000. Okay, that means that the difference is $18,500. Most people think, oh, they got to come up with $18,500. No, they only have to come up with 25% of that difference, right? So that is $4,625. That's their down payment plus closing costs.
Yeah,
that's the down payment. It's not $18,000; it's $4,600 because the VA, as you know, they're going to back 25%. Yeah. It's all 25%.
It's amazing. And anyone watching, we don't expect you to memorize that. Call Justin. Yeah. We'll explain it. But that's, I mean, because people think like, well, no, I already have this, or then I have to do this. I'm like, well, you can use it, right? But if you're maxed out, or you find something higher than your eligibility, you just have to have a down payment. But again, it's not like you said, it's not that 18,000. It's just a portion of it, and so therefore, it always makes sense. Yep. It always makes sense.
Yes.
At least in my book, it always makes sense.
Oh, I assume you probably do what I do is say, hey, listen, you want to do the math? Here's the formula. We can just do it for you.
Yes.
It's like, here's where everything lands.
Yeah. And there's also, I mean, like everything, like there are online calculators and stuff. I just always tell people, like, just send it, make sure your math and my math are mathing, because some of the calculators are off, right? Or some of the loan limits change. Sometimes not everything you see online is true. So, but the formula is pretty easy. And there is a cool calculator somewhere online, but you don't want to get caught up and go to one of those terrible online places and get caught up in their calculator.
Well, that's just it. It really is a simple math equation per se. Yeah. It's just steps. It's like, wait, you turn left, turn right. I was like, listen, just what you start off with, I'll do the math for you.
All right. So let's see. Other benefits, right? There's no mortgage insurance. If you do 100% financing, there's no mortgage insurance. Interest rates tend to be better than conventional loans and no mortgage insurance. So
Yeah.
it's a win-win.
Yeah. Rates are
Um,
going to generally be better between 3/4 of a point to 1 full point.
yeah. Yeah. I have noticed that too.
In this market, that's
Conventional loan varies, right? Like down payment, your credit score, all of that stuff. Like the rates are different.
yeah, VA, and I would say that this is a little bit where VA and FHA are somewhat similar. So conventional, they care about a whole bunch of things, right? It's
Yeah.
credit score, down payment, even DTI, debt to income, right? And because that can play a role in if they have private mortgage insurance or what have you.
Mhm.
But FHA, they don't care about your down payment. It's all about the credit score.
Yeah.
VA sits a little in the middle. It's more on the credit score than it is anything else, but they will give you a little reward. It's not much, but a little bit of reward for if they are putting down payment. And they'll see a little extra benefit there. I think it starts at 5% down,
Mhm.
and if they do not have a VA disability rating, so they have to pay that funding fee decreases
Right.
with that
And
5.
funding fees, it's different, right? So if you don't get the disability, you have funding fee. There's first time use, subsequent use, and then it also varies. Like you said, if you're putting a down payment, 5, and then it doesn't vary much though over 10, right? Like it wouldn't matter at that
Right.
point.
After
Like
10, it's the
yeah,
same.
yeah,
Yeah, I just had a client that had put, I think it was 5% down, and it was like 1.25%. It was first time use.
yeah,
The big thing to know there is a difference in that funding fee from active duty and separated from service, and someone who, even if they're separated from service, but they were National Guard,
oh yeah,
that funding fee is different than active duty, or someone who served one of the more, I hate to say it this way, major branches.
yeah. I get you. I get what you're saying though.
Yeah.
And then refinancing VA loans are real easy too. They're like the easiest refis that we do. There's like
Yes.
nothing.
And those days they're coming back fairly soon. It's gonna be well, I say soon. It's gonna be a little bit, but yeah.
I think you're going to find pockets of it though, right? Like as the market dips, because I saw the handful of people that it just needs to be a little bit better who
Mhm.
purchase like we're probably like year and a half, two out from that, right? Like if we can get just below 5
Yeah.
for a little bit or mid 5s, you would see probably a whole handful of people that it would benefit.
Oh man, yeah. If we hit mid fives, which we barely touched back in
I know.
mid-ish April, we hit that spot for like 48 hours.
I know. I got a handful of people, but everyone was convinced they were going to go lower, and I was like, "No, guys, please! Like, I can't." And then they did. Like, right, it was literally 48 hours, and you're
Yeah,
like,
they
"Done."
do. The
And
way
then you're
they're
like, "Catch you on
moving
the
on,
next round,
oh,
bud."
this is the break we've been waiting on.
Yeah, everyone wants to think it's. I mean, we're all wishful thinking. I'm hopeful, right? But
Yeah,
we have to be realistic. We have to be
yeah,
realistic.
yeah.
Okay. Anything we didn't touch on that you think if consumers are watching this or realtors or anyone that they need to know about the VA loan?
I would say a couple things. Number
Okay.
one is you really, really want to make sure that if you're using your VA, really any loan product, but definitely the VA because of how flexible it is, make sure that whoever you're working with actually understands the VA benefit. Um, I've had rescue loans from Veterans United. I've had rescue loans from Navy Fed.
Ooh, I did one
You
of those.
know, and yeah, sometimes they'll Navy Fed will have those kind of, we'll call it a sale, right? The rate's a little bit better than anywhere else, but man, so I hate to, it's not to make fun of anybody, but it's the joke I kind of throw out there is I'll say, yeah, if you're dealing with someone that was flipping burgers or delivering pizza 6 months ago, you're taking a very big risk. And is it really worth it? And I'm not saying we have high rates because we don't, but sometimes that quarter of a point or an eighth of a point on the rate,
Yeah.
it's worth it to know your house is going to close and or the loan's going to close, and it's a smooth process.
Yeah.
Right. So number one, make sure that whoever you're working with actually understands the VA home loan benefit more than the fact that it's no down payment.
Yeah. Well, and
So
some things too, like sorry to cut you off.
no,
People get caught up, especially in the market that we're in right now. Like they get caught up on the rate and they're like, oh, they offered me rate. And I'm like, well, what did they charge you for that? Like, oh no, they didn't. And then when you do the side-by-side comparison, they just call it something different. I'm like, oh, they did, right? And it's not worth paying that for the quarter better. And then you show the breakdown of like your payments this, but you're paying this. And then they're like, oh, they didn't tell me that. Like, so
right. Yeah. So that's, like I said, that's definitely something to keep an eye out, because lenders, there's some shady ones out there, and they will hide things or manipulate it, move things around. And to me, it's the dumbest thing. It's going to come to light eventually. And sometimes it doesn't happen until like the week before closing. And then now you've lost all the trust that you had lent to that, as a consumer to the loan officer. They're like, they screwed me over. I'm like, man, at the point it's too late to make a change.
A whole lot can be done those last couple of days before closing. That's for sure.
Yeah, it's not the right thing to do either. It's causing more damage or more harm than good. Yeah. But I think the second thing that I can think of here, as far as a message, is simply that it's kind of tied to the first one, but the VA home loan benefit is so incredibly flexible. The VA wants every deal to work for the veteran. It does have to make sense, and so the extreme that I always use is you can't go on a contract for a $700,000 house. The appraised value come in at 300 and go ask the VA for 400,000. They're not going to, it doesn't make sense, right? But, they want every deal to work for the veteran, and it does stand on its own. It's not FHA, it's not conventional. It is such an incredibly flexible loan. And it does require, in my opinion, a loan officer to actually know how this thing works, to allow that veteran buyer to receive the full benefits from the loan program.
Yeah. It's I dare say conventional is a very black and white product, but it kind of is compared to like VA. So like you said, there's so many different things that you can go above and beyond with, right? So it's always worth it. I don't know. It's always worth a little ask. And he said, who you work with matters. So you want to make sure your realtor knows the ins and outs of it. So then when they're negotiating on your behalf, they know what you can and can't get rid of, right? The financing contingencies.
Well, and that's, mine your job, right? Is to help continue to educate the community, to educate our realtor partners so that they understand that when they get a VA or veteran buyer, that, that veteran is well taken care of, and they can even pass along some of the knowledge and the understanding, as much as they will hear from us.
Yeah. I agree. We'll do a little shout out for you where you're I know you're at CMG Home Loans, but because I have my shirt on, I don't even know if you can see it over that emblem, but what state you're licensed in? And I'm going to throw up all your contact information and obviously tag all your stuff. But give a little shout out on you and where you at.
Well, thank you. So I'm down here in Texas. The Dallas-Fort Worth Metroplex. Much like you, my license is good for the entire state. I do have an Oklahoma license. It's because it's only like 2 hours north of me, but I probably do 10 deals a year in Oklahoma. But Dallas-Fort Worth Metroplex, VA is primarily what I do. I love helping our veterans. And really, I love helping them understand the benefits of what they've earned for serving the country. And I love helping realtors understand more so that they can pass on the servitude to other veterans.
Very nice. Well, thanks for joining me.
Absolutely. Well, thanks for having me on.
I'm going to have you back because I feel like this is fun. We're going to pick another home loan myth of sorts, and we're going to pick it apart. All right.
We'll make an entire series out of it.
We will, right? It'll just be the Justin and Mel show. It'll be so funny. We just talk to each other. We don't need anyone to watch. We got this.
It's like a podcast.
See you guys next week. I have someone coming on talking about all things VA benefits, disability, rating, GI Bill, all that fun stuff. So we'll see you guys then. Yeah.
Week ago, I think it was, we just got the new VA renovation.
Oh, yes. Yes.
So, yeah, if there are, I'll tell you what I love so much about it. I got on the horn with so many of my realtor partners and say, hey, those houses that your clients are looking at, that the ones that come in and say cash only, like they won't even take conventional, they're like cash only. I'm like, well, hey, what if your veteran buyer is interested in that house? It's like, we can do a VA renovation on it. So it needs a